back.
What is this, game what?
This is game 6 right now.
Game 6?
Game 6, another home game for y'all.
Man, I'm happy about today, man.
I am too, brother.
We got, in my opinion, he's a legend.
Okay.
Social media guru.
Young legend.
That mortgage guy on social media. TikTok phenom.
There we go.
Close to 700K
What else?
on TikTok.
What else?
5+ million views
What else?
on TikTok.
Let's go.
The ultimate lead generator.
There we go.
Top 1% in the nation.
Let's go.
Now, hold on. Remember we were just talking about, like being top 1%. That's phenomenal.
It's phenomenal.
It's how many people are loan officers in America?
Too many.
Too many, yeah. But he's top 1%.
Too many.
That's major.
Yeah.
We got my guy Scotty B in the building.
Let's go. We happy.
Thank you guys for having me. I appreciate it.
Man, I'm excited. I'm always excited, man. Thank you.
Of course.
Because I'm excited to learn.
There we go.
I love learning.
You gotta learn something new every day.
All right, Scott, man. Thank you for coming.
Of course. No, I'm excited to be here.
Yeah, man. So this is Below the Iceberg podcast. So we're just about to go into it. So we're about to start Below the Iceberg. Okay. Awesome. So where you from, man? Like, tell people who you are and where you from.
Yeah, so I was born in Jersey. My mom and I moved here when I was, 5 or 6 years old. Grew up in Cockeysville area and then moved up to Bel Air for middle school. And grew up in Maryland. Have family throughout the DMV and in Jersey, and that's kind of where I'm from. Went to public high school, Bel Air High School, and then John Carroll. So it was kind of a mix of public and private, which was kind of different because I grew up in public school and then got unleashed to that crowd, which was a little different. But yeah, that was kind of a little bit about my background. I came from sales management experience. I was in the fitness industry and doing modeling and different types of things, and realized that I could make a lot more money in finance, and tried just testing it out with the waters with my dad. He had his own company, and that was kind of how I got into the industry. And over the last couple of years, I have learned a lot about branding and social media and just content generation, but that's kind of what's led into that mortgage guy and where I'm at today. So
okay, man. I didn't know you were a model, man. You never told me.
Yeah, man.
You was on your Fabio vibe.
Actually, it was at the Under Armour clinic right down here. It was me and Chris Evering and a couple other guys that I knew. Chris got me into it, and that was when I was in my heyday and like really training hard at like 230, 240, and was just going ham at the gym every day.
Sheesh.
But yeah, it was a good time.
So we talked about that in your modeling career, a couple different things you do. Was that your last 9 to 5 before you jumped into the mortgage industry, or what was that?
Yeah, so it was a mix of me being a sales manager at Gold's Gym, selling memberships, as well as modeling, and then that was kind of how I got into the finance industry. And a lot of people don't realize how long it takes to build a book of business, as a loan officer. So his first 2 to 3 years are rough.
Okay.
Yeah.
It's definitely an
So
adjustment.
when do you start? Like when did you start in the mortgage industry?
So I started when I was 22 and a half, almost 23. I got licensed and started doing refinance business. The rates were really low at that time. And then I think in like 2015, 2016, the rates started to trickle up. And I was like, man, I can't do refinances for the rest of my life. These rates aren't going to be this low forever. And that was when I dove into purchase business and started networking with agents and doing different things. And at the time, that was when we met.
We met, yeah. I think it was like 2014, 2015 when we first met.
It was like the bus tour, right?
Yes, the bus tour, yeah. I remember that day.
Now, what's the bus tour?
So the bus tour was, you can explain about it, I can.
Yeah, we did this thing called the poker run where we had like 5 or 6 listings. At each listing, everyone got a poker card. We rented out like a limo bus and had lunch and drinks, and we would preview 6 listings, and then all the agents on the bus, we would have like 25, 30 agents from all different brokerages. They would fill out a review card of the listing, let you know if they thought it was overpriced or, what the weaknesses were or how it stood. And that was kind of the premise of it. And we ended it off at like Looney's Pub where we did the best 5 cards. Won, and they got like a gift certificate, or one time was an iPad or something like that. But it was fun.
So basically it was like a party bus, brokers open.
Now that's hard because that's a different type of marketing technique. You know what I mean? I'm sure that sign up was crazy. It wasn't hard to get people, to sign up for that.
The first go around, people were kind of skeptical, and then I feel like once we had 2 and 3, people started to figure out, it was a good time. It was just going around looking at listings. Plus, the listing agents got a lot of feedback.
Right.
And I think 2 or 3 of the listings out of the 3 or 4 runs we did sold from another agent that was on the bus who had a buyer. So that was pretty cool.
There we go.
Yeah.
That's clutch.
Yeah. I think, man, you were like the 2 youngest on the bus, man. I actually got a picture from that day.
Yeah.
Yeah,
I think it's
so-
on Facebook.
We might have to put that on.
Yeah, we
we
pull
wanted
that
to-
up.
we
on
wanted to
that
put that on there, man.
We
Yeah.
were so young. It was so hard to build a business back
I
then because
know.
we were so young.
Yes.
We didn't really know what we were doing, but we knew we wanted to get after it, and we worked hard. But
Yes.
man, that was a tough time.
Right.
And that's
Tested us.
That's what's like the grind. Like I think people need to know because you guys were the youngest. I've always been the youngest getting into the industry. I got my license when I was 23 when I was in college, and started selling real estate full time a year after that. But tell them about that process of getting into the mortgage industry. We had to do the poker tour. What's it called?
The poker run.
The poker run.
Yeah.
The
Yeah.
poker run. Tell us about that. Maybe you dealing with people. This is some of people's largest purchase they ever made.
Yeah.
How did you handle that, and how do people get into the mortgage industry?
Yeah, it's tough. I mean, as far as licensing is concerned, you've got to get sponsored by a bank or lender. You have to, run through the licensing process with the DLLR. For me, I failed the test the first time around, but it takes probably 30 days or so to run through there's like a 40-hour class you have to run through. They have hybrids and different ways you can take it. And then you have to take the test, and then they have state tests as well, depending upon what state you want to get licensed in. But it was really tough. I mean, the problem is with the licensing itself, nothing of the licensing, just like real estate, teaches you about the day-to-day that you actually have to do when you get into the business. So it was a lot of trial and error and figuring things out when I was younger. And, it was just, you make mistakes and you learn from those mistakes. You try to get better every day. I still learn every day, but it definitely takes time, and just you got to be patient and just have grit, because that's really what it comes down to. You can't give up, and just got to keep pushing forward.
Yeah, that's a fact.
So
For sure.
Yeah. So just to piggyback on the mortgage industry. So how do loan officers get paid? I know, but it sounds better coming from you. Like, what's the
yeah, I
how
mean,
do you get paid?
there's different companies out there, that offer different hybrid ways where they'll give a salary plus commissions, and in those situations, the commissions and percentages that they get are a lot less than if you're 100% commission. So there's kind of a blend of different ways loan officers are paid, but for me, I've always been 100% commission. So you got to hunt to eat, and that's kind of what I've grown from and just learned from, because I've never been in the salary type world position. I don't know how that works, but I love being able to control my own destiny. And the more that we work, the more we make, and not a lot of people can say that for themselves. So I love that about our business. We control our destiny.
Yes.
Did you play any sports at all growing up?
I did, yeah. So I played all different types of sports: soccer, baseball, basketball. Once I hit John Carroll, it was kind of tough because everyone was on that level. So
They recruit though.
yeah,
Definitely recruit outside
dude,
of-
our varsity team, there wasn't a guy under like 6'8".
Yeah.
I'm like, I thought I was big growing up, but I'm not that big. So, but yeah, all different types. I played volleyball. I loved volleyball. But then once I hit college, I kind of went to Harvard Community College because I had a ton of money, and then transferred to Towson. So that was kind of how it went for me. But,
That's one of the things that like people underestimate. When you're doing suicides and up downs, and your coach is talking about, yeah, I'm building you not only to be a better football player, a better man or whatever. A lot of people don't understand how that's really preparing you for business or entrepreneurship or just to be a good productive citizen.
Yeah.
But that's where that grit comes from.
Yeah.
And that's one of the things that we have about our podcast. We call ourselves Selfemployed Podcast, and as you heard when we started, what game was this? It's because I played football in college. Jamal played basketball, so we have like a sport background, and I feel like that propels us in business so much.
it does.
You know?
That competitive spirit is huge.
Yeah,
Yeah.
for sure.
Yeah, I love to compete, man.
Yeah.
I love to compete.
Yeah.
I always want to be the best. I don't know. It's just something in me.
Yeah.
I always want to be the best. I need to learn from whoever's the top, and I need to be the best.
Yeah.
That's just what it is.
Yeah.
Yeah, and I know you have that same mentality because you top 1%.
Yeah, man. I always knew that I was going to push and figure out a way to get to that level, but honestly, social media in the last year and a half, 2 years has been a whirlwind. I never expected it to happen so quickly, but it's crazy. I can't believe it still.
So what you like, 10x your business?
Yeah. I mean, in 2019 I did like 13 or 14 million. I should do, a little over 100 to 120 million this year in volume.
Yeah.
So
Awesome.
it's
Sheesh.
yeah, all from social media, man. It's just
We gonna get into that.
Yeah, we're
We're gonna get into that
a little bit.
100 million? Sheesh.
Yeah.
Man.
Yeah.
That's bag talk.
Yeah, that's big bag talk right there, man. But that's a whole other story, man. Yeah, so we're going to talk about the mortgage products out there, the loan products that are available for consumers.
Yeah.
Can you talk a little bit about the FHA loan, the conventional financing, and what like the difference is?
Yeah. So you got your traditional financing options: FHA, VA, USDA, conventional financing. A lot of them have a blend of what the minimum credit score requirements are. FHA and VA, most banks will go down to the low 600 range. We're able to go down to a 580. Conventional financing, majority of the time, if you're below a 680 credit score, FHA and the government loans make more sense because they're less credit driven. But conventional loans, that's a great program if you're a stronger credit applicant. And then VA financing, USDA financing, FHA, those are your government programs. But then you've got other programs out there, with like non-conforming commercial options, like you said, that you finance this building under. There's hard money loans for like investors. So there's a lot of different options. So it just kind of depends on your situation. If you're looking to invest, if you're buying a primary residence, a second home, depending upon what the situation is, certain options will definitely make more sense than others. So
Okay.
For sure. Jamal and I, we're both agents, and I'm a broker. And the first question that I have from all the clients is, where are the grants at? Where's the money?
Yeah.
Free money.
And we call that OPM, other people's money. Everybody know OPM. Okay, other people's money. So, can you tell us a little bit of what opportunities are out there for people, what they can do to kind of be savvy in this market right now from your perspective?
Yeah. I mean, there's a number of different down payment assistance and first-time homebuyer programs. The OPMs, like you said. To be honest, it's not always the best situation or the best option from a financial standpoint, especially in the long run. The majority of those programs have higher interest rates, which is great. You get the 3 or 3.5% down payment covered, but then you're looking at a higher interest rate. In majority instances, you're talking about $75 to $150 more a month in interest. And a lot of those programs will restrict you from when you can sell or refi the home. So you might get stuck in that program for 5 to 15 years before you can get out of that loan. And that's where they get you. You're paying the higher interest on a monthly basis. And then the risk is if the market gets worse, like they're saying, and we're at the lowest point in the history of the U.S., which it's going to get worse, it's just a matter of time. You get stuck in that financing option with the higher rate over the 30-year term, and you can't get out of it because rates go up. Then you're paying 30 to 60 grand more in interest just to get the 5 to 8 grand or whatever it is they're giving you towards a down payment. So, while it sounds good up front and it's great to keep more money in your pocket from a financial standpoint in the long run, it doesn't make as much sense in most instances, but it's kind of, teach their own. So
You said a lot in there, and I think one of the things that just from a real estate perspective is you said you think the interest rates might get even lower.
No, I mean, I think we're at one of the lowest points that we'll ever see. I think in the next 3 to 5 years, as the market stabilizes post-pandemic and everything that we've got going on, I mean, the big banks and the Fed, they want to increase rates, so it's just a matter of time. And I think in the next 3 to 5 years that we'll see the mid 4 to low 4% range, maybe, creeping up to 5% depending upon what's happening.
Okay.
But I think it's just a matter of time.
Okay.
So all in all, even though the money is free, it's not really
It's not free.
free.
Yeah. Sometimes you want that free.
Yeah.
Not all free is good free.
Yeah.
Exactly.
That's a fact.
So
That's a fact.
we're going to talk a little bit about your TikTok following and everything that you have going on. But one of the biggest things, especially in the industry, is we get buyers that say that they're pre-qualified.
Right.
And different lenders' pre-qualification process sometimes are different. Some haven't done a lot of underwriting, just a Q&A, and now you're ready to go shop. Can you talk a little bit about the NFM pre-qualification process and just your thoughts on people getting pre-qualified?
Yeah, I feel like honestly it comes down to the loan officer and how they operate. For me, I'd rather cross my T's and dot my I's and be as thorough as possible on the front end just to make sure I'm not wasting the agent's time. In a lot of instances with my agents, it's a lot of agent partnerships that I've got business coming in from. So, I want to be reliable from that standpoint, not waste your time out on the street shopping with a buyer who may not qualify or may not get the deal done at the end of the day. So, and we see it all the time. I have people hit me up from TikTok that want to buy a house and they're like, I applied with 2 other lenders and they didn't make me get W-2s or pay stubs or any of this stuff. I'm like, I'm sorry,
Right.
if you want to buy a house with us, this is what I require. And if not, no worries. You can go with a half-rate lender that you might not get the loan with and go under contract and spend money on inspections and appraisal. And you're out, $800 to $1,000 because they didn't do their due diligence on the front end.
Right.
So, that's my standpoint from it, but I think it comes down to the loan officer and how they operate. So
and that's a fact, because one thing I can say, having one of the top producing teams, just not even in the region but in the country, is that it's not only us selling the deal, it's the loan officer behind it. So when you get that call from the listing agent, and when we say listing agent, what we mean is the agent representing the seller, and they're saying, "Hey, Scott, how serious is that buyer?"
Yep.
It's underestimated how important once you or someone from your team answering that call is, but to also give that response. And can you talk a little bit about what you do and your process for those calls? I'm sure you're getting them by the boatload.
Yeah, honestly, what I do is when my agent partner or even when my buyer and I'm not familiar with the agent, they submit an offer, I always tell them to send me the listing agent's contact info so I can at least call them, and if they don't answer, I can text them and let them know that they're more than qualified. I ran everything through the underwriting system up front, collected all income docs, everything's good to go. But that is pivotal in this market just because the inventory has been outrageous for the beginning parts of this year. So it's definitely helps give certain buyers a leg up because not all lenders are doing that.
Yeah, for sure.
So,
That's amazing.
Yeah.
This market's been crazy, man.
Yeah.
You talk about inventory is low. It's very low. It's crazy, man. It's a lot of buyers, not enough sellers. We gotta compete, and the loan is definitely give yourself a leg up when competing.
And tell the audience what that looks like, because we're saying inventory. What does that translate to when it comes to making offers?
When we talk about inventory, think of it like a magazine, like or like clothing or something like that. Inventory. How much of it do you have? Use the Yeezy for example. How many sizes do you have? How many do you have? If you don't have enough, then people are going to give you more money for it to have it.
Right.
So that creates a bidding war. So when you put yourself in a position for a bidding war, the price goes up.
Yeah.
Definitely goes up. So your financing definitely give you a leg up when competing.
Because
I love to compete.
On our team, we had some calls where I had to talk a lot of agents off the ledge because we would get deals where they're competing against 10 to 15 buyers.
Yeah.
And, the sellers want cash.
Yep.
So, that's just the game. And hopefully some of you all took something from that little segment, but that's very important.
That's for sure. Yeah, so buyer's market. Seller's market. But yeah, so I just have a question about the new loan guidelines for people who are college students and people who are looking to purchase.
Yeah.
So what are the new guidelines?
Like the college debt?
Yeah, the college debt, yes.
Yeah, so prior to, right now, the mortgage industry had to use 1% of an outstanding loan balance as a payment against a buyer. Even if it's in forbearance or you're in an income-based payment plan, we had to use 1% of whatever the balance was, which I've got buyers right now that are under contract with $200,000 to $400,000 in student loan debt.
Ooh.
At that level, you're talking about a $2,000 to $4,000 minimum payment that we have to use against them. When in actuality, they're not paying anywhere near that amount. Majority of them, at that level, are on like student loan forgiveness plans, where at a certain point they're going to get it forgiven, or not have to pay the full amount, or whatever the instance is. But that 1% amount that we had to use was just crushing buyers and their budget and their buying potential. So as of now, it's now been reduced to 0.5%. So now we have to account for half of what we did previously as far as the monthly payment for that debt, which is, that's a big difference for a lot of buyers. That could be the difference of a $300,000 purchase price to $550.
Sheesh.
So that definitely helps from a buying power standpoint.
More buying power.
For sure. And I saw an article somewhere, I think it might have been on FHA or something. It was saying that now some lenders can go off of what is reported to the credit report.
I don't know about that.
Okay.
I'll do some research on it, but I believe it was you have to either use the 0.5% amount or like a fixed rate payment option, where it's like a fully amortized payment where it's not like income driven. But I'll double check that. I don't know if maybe something changed recently.
Yeah, I don't know. I mean, you're the guy. You're the go-to guy. So I'm just saying, like, I just saw that and I was like, bro, the game's about to change.
Yeah.
And what Jamal was talking about as far as buying power is how much you can buy. You know, and that could be relative as well, because when you get a client, let's say they're qualified to buy a $400,000 or $500,000 home, and we know that you're in a situation where there's multiple offers. They're qualified for $400 to $500, but sometimes the listing agent wants to know how much can you guarantee of that. So what I mean is, if the appraisal comes in at $450 and you offer $500, you were qualified for $100, but the appraisal is only at $450. So what's going to happen with this other $50,000? Let's talk about it.
Yeah.
You know, and that's just the game that we're in.
Yeah, that's a major gem right there. That's a bird you just dropped.
That was a bird?
Yeah.
Okay, we're gonna have to chop that up. You know?
Yeah, that's yeah. So that's definitely the result where a lot of people getting their contracts accepted, because they are guaranteeing that money above the appraised value. Yeah. However, they have to have that money. Yeah. Because if they don't, they're gonna have to cough up that EMD.
Yeah.
Yes.
So, you know, we're talking about your success, and you know, you guys can do $100 million this year. But can you reflect on some of those failure moments that you had getting to this level? Whether it was just getting in the business or maybe expanding the business via TikTok. What are some of those failure moments?
Yeah, honestly, you know, in 2017, I kind of took a little hiatus from the business, where I started my own company. It was outside of the mortgage world. It was a magazine company. It was the first medical cannabis magazine in the state of Maryland, where I was working with all the dispensaries, growers, doctors, you know, and we grew it in over a year to close to $25,000 a month in contractual ad revenue. And it blew up really quick, and that was kind of where I figured out the branding side of things and social media, just content generation, and a lot of what I was doing was stemming from social media and just like building a community local surrounding, you know, what was going on in the movement and ending the stigma. And so, you know, that business ended. My partner and I had to go in different directions, and that was when I kind of came back to the mortgage world, and I was like, you know, I need to create a brand for myself, you know, become like a public figure to some extent and educate people, which was exactly what I did with the magazine, was, you know, ending the stigma, sharing the science behind the movement, how it actually interacted with our bodies. And that was kind of how I figured out like what the consumer wanted to see as far as content and information and education. And that just kind of stemmed right into That Mortgage Guy, which I launched within like 3-4 months of getting back into the business.
Wow. So it pretty much took off right away, or?
Yeah, I mean, it took some time. I think at first I didn't have my eyes set on TikTok, so I was doing like Facebook videos and Instagram. And if you go back and look at it, it was pretty bad starting out. And then I had a few videos that went pretty viral organically on Facebook, where I did like some music videos and rewrote the songs, you know, and the lyrics to those songs. Like the one was Bad Guy from Billie Eilish, and I made it into That Mortgage Guy, and just like a parody about buying a house and just different things. I think that got like a little over 100.
I think that was one of the first ones you showed.
Yeah.
We've been talking about you for a while now.
Yeah.
I think that was one of the first ones.
Yeah, I like that.
Yeah, that was one of the first ones. I'm trying to get back into it. I just need to. I want to start doing like that monthly. I need to set some time aside and start doing it. But it's definitely on the radar because I love doing it. It's a lot of fun. But that was kind of how that led into TikTok. You know, I was sitting in my basement, and I won't forget, at my old house. I was working out, listening to Gary Vee's podcast, and he was raving. He was raving about the organic reach on TikTok, and you know, I was like, man, I'm gonna go check it out and see what's going on. This was when I was really starting to dabble with branding and content gen. And I started going hard and doing like 1 or 2 videos a day and trying to figure it out. And I think like the 24th or 25th video got like 300,000 or 400,000 views overnight. And I was like, man, this is legit. I gained like 8,000 or 9,000 followers from the one video. And I was like, wow, like I need to really take this seriously. And that was when I really started to like take content generation to another level and incorporating it into my day to day and planning and building strategy around it. So it's that was kind of there were a lot of, for the longest time, man, I was doing all the old school stuff and what all the old guys do in the industry.
Mailers and stuff like that.
Yeah, going from
So you used to do the Buffini Method.
Yeah, the Buffini,
Little
Popeyes.
Talk to us about that.
Yeah, so the Buffini Method is you do Popeyes. What you used to do, like little trinkets and
little
used
things.
to meet up at used to go to different offices and used to give like little trinkets.
Yeah, just like little things. One was like an extra gum packet with like a little thing on it said the difference between ordinary and extraordinary is a little extra.
Right.
It was extra gum.
Okay.
And so just like different things like that where it was a low price point, spending like 30 to 80 cents for one piece, dropping it off at different agencies to 150 to 180 agents, but I was just blanket marketing people, and I was doing what everyone else was doing. And then when I kind of came back to the business after the hiatus, I was like, man, I need to figure out something different because I'm tired of doing the same shit everyone else is doing.
And that was TikTok.
That was TikTok, and social media and branding and video content. So
he was telling me about TikTok, man. I'm mad I didn't like transition into doing it.
It's not too late.
Right.
Talking like,
man.
No, but he got in it. I feel like he got in it before it became like a boom.
Yeah.
You know what I mean? Like he started early. He kept telling me like, Jamal, you got to get into TikTok. I'm like, okay, I'm gonna think about it.
The boat's still there, man.
Yeah.
I don't know if you guys are on there heavily, but one agent that my team works with, her name's Laura Matera. She's with Coldwell Banker.
Okay.
She started going hard in January, and she's up to like 340,000 followers right now.
Yeah, we got TikTok guy.
Still there.
Yeah.
One of our behind the scenes guy, Montre. He has a little following. He's a DJ. Yeah, 17K on TikTok.
So
Like, man,
Quick
you gotta
flex.
start somewhere.
Yeah, but I don't really know about it. He knows more about it than I do. So we did we create one? Did we have one? So we got a TikTok.
There we go.
So we gotta make a video. That's all.
For sure.
Yeah.
Sure. So it seems like just from listening to your story is that you were pretty much independent contractor, self-employed for the majority of your career. You say you didn't have really any experience with the salary type of thing. What gave you that confidence and leap of faith to just operate? And you mentioned that you have a wife and a family. Like, what gave you that?
Thank God I got in when I was 21, 22, because I could not get into the business right now, sustain, the responsibilities and the, mortgage payment and everything that I have as far as bills for my family. I was blessed that when I got into the business, I was still living at home. So I didn't have, rent or mortgage. I had a car payment and car insurance and a phone, and that was it. And, my first year I only made like 30 grand, and, I made 40 grand the next year. And it was hard, I was, at that time we were trying to find a place to rent. So we found a rental. Luckily my fiance, my wife at the time, she had a job with MedStar and was making okay money too. So we made ends meet, but I couldn't get into the business now, not with the amount of time it takes to build a book of business. And unless you've got a security fund of, 12 to 18 months worth of bills that you can sit on and know that you got your bills covered until you're able to build up enough business.
Right.
And if you can't cut it, you just gotta know you gotta go back to a salary job or something to be able to make ends meet.
Yeah.
So
You say UPS is hiring.
yeah, and Amazon too.
They're
always hiring.
You can always get a job. That's a whole nother story, man. But yeah, man, close to 700. Are you at 700 now? Like, where you at?
I'm trying so hard.
Close.
I'm right there. I'm at like 698.8 or something like that. I'm just so close. I've been hovering at that level for like a month and a half, and it's driving me nuts.
Yeah.
So
You might have to make that video. Where we take you about a hump, bro. I'm telling you, you got some ideas.
And you got millions and millions of views, man. I think one of your videos got like how many? What's like your top views on one of your videos?
I think it was like 5.7 or 5.8.
5.7. Sheesh.
Yeah.
So overall, how many views do you have overall?
I don't know, honestly.
It goes up every day.
I want to say it's probably close to maybe like 50 million.
Wow.
So 50 million saw your face.
Yeah, I mean, I've got 6.6 million in likes, and normally my likes are around like 10% as far as engagement and viewership. So if that correlates with the amount of views I have, it should be around like 66 million views, like around that level.
Ooh,
Yeah.
man.
We talking numbers.
Yeah.
We talking big
Hey,
money.
you talking about what? It's almost, Drake say a lot of y'all got more followers than dollars. Well, he got 100 million. You about to close 100 million. He got 66 million views. So I think you're doing good.
It's adding
in
up.
that perspective. It's adding up.
The numbers are adding up.
Okay, I see you, Scott.
Yeah. So why TikTok? Why TikTok? Why not Instagram? Why not Facebook? Why TikTok?
Yeah, I mean, it's really just the saturation with where Facebook and Instagram are. It's tough to grow a following on there right now. Luckily, these other platforms are kind of reshaping what they're doing as far as Instagram Reels, YouTube Shorts. Pinterest has like this in-profile video stuff where people are getting millions of organic views and they have no followers. But a lot of these platforms are starting to try to mimic TikTok. I mean, they're not starting, they are mimicking TikTok down to a T. YouTube Shorts, Instagram Reels, Pinterest, all of these things have been in a shift in the last year and a half since TikTok has exploded. And now they're one of the big boys, but I mean, the only reason I really jumped in was because of the organic reach and the potential. And, there's no platform like it where you can have no followers, post your first video, get millions of views, and get 200,000 to 400,000 followers overnight. And that's what some of these accounts are doing. I mean, I saw one yesterday that had like 15 or 16 million views on their first video. They had one video, and they had like 287,000 followers.
So it's like your phone just going ding, 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 ding on that. What is that like when you woke up and you had the 300,000? What is that like?
Yeah, I mean, honestly, I turned off the TikTok notifications a long time ago because
It's crazy.
It's too much, yeah.
Yeah.
But no, it comes in spurts. I mean, I think at the beginning of this year I was at 279 or 280. And I had like a series of different videos about people in their 20s to this like specific sound. And that sound and like that video series was responsible for like probably 60-70% of my following.
Wow.
So like once you kind of find your niche and you have something that's performing well, do more of it and replicate it in different ways with different value snippets and different things. And that's how a lot of creators have exploded. Like they're doing the same content, but just spinning it in different ways. And it works. So.
Right. So when you're making your videos, do you like freestyle them or do you you have them written out? Like, okay, I'm going to do this type of TikTok today. I'm going to do another TikTok tomorrow.
Yeah, it's a good question.
Or what?
No, so what I do is I do and it's just been over the last year and a half of just trying to figure out how to strategize this and make this like a consistent thing I'm doing daily. So during the day, I've kind of had to like compartmentalize it because I'm so busy during the day dealing with clients and, just shooting videos on the fly and doing different things where between like 9:30 and probably 11:30 midnight, I'm spending time consuming content, looking online to see, legislation updates or what type of information that I can put out, but also spending a lot of time like consuming content and seeing what's performing on TikTok, what's trending, what sounds are trending. That 90% of the battle with TikTok is if you've got a trending sound, like your odds of going viral and having more organic reach is so much higher. So you've got to stay on top of like what's happening and what trends are popping off, what sounds are happening, because it's ever changing. Like every week there's just a whole new batch of trends and stuff happening. So you've got to stay on top of it. And it's a lot of work, but what I do is I consume the content at night. When I'm going through my TikTok feed for the For You page, if I come across something I'm interested in or like, oh, I can flip this way or what have you, I'll text it to myself and then just put a blurb in there of how I want to flip it. If it's a point of view skit, I'll put like the different like verbiage snippets of like what I'm thinking or what the plan is. And then that way I can execute on it in real time, because now it only takes me like 5 to 10 minutes to do a video just because I have it all planned out and I can just get it done. It only takes me 20-30 minutes throughout the day, but the planning and the strategy behind it is just a big piece.
So we want to tell you one take, Scott. You do everything one take.
What's that?
I say you do everything one take. It takes you one take to get it.
I mean, for the most part, unless unless I really mess up and I'm like, no, I got to scrap that. But yeah, I mean, I don't overthink it too much anymore.
Okay.
So.
Sheesh.
Yeah.
So I think what we want to know, and everybody wants to know, is how do we turn these followers into dollars?
Yeah.
How does it happen?
Yeah, I think honestly it comes down to, for me, I try to focus on 3 things, providing value through education, and some sort of informational snippet, whether it's legislation or something about a loan program or down payment assistance or minimum credit score, or whatever it is. I'm trying to shine a light on something But then I also try to focus on being entertaining, which taps into, the culture of the platform and what's happening on there and the different trending sounds and things like that. And then the last piece is kind of being authentic. Like I'm kind of sarcastic and off the wall and different. So a lot of my content, shines through with that. Like I'm not your traditional mortgage banker that's real straight laced. Like the video I just did 3 hours ago has the F-bomb in it. So it's,
I think we was watching that too to figure out what you, it was like, ain't no way, boy.
ain't no way, boy.
Oh, you know about that?
That was did you see that trend?
So we've been talking about that. Yeah, we've been definitely talking about that.
Like,
did you see that video that I did to it?
you did one to that?
Yeah, I did.
That's crazy. We didn't know.
Yeah,
Yeah, you gotta show it to us.
Yeah.
Like, ain't no way, boy. Ain't no
We were talking about like strategies because we wanted to do a TikTok together.
Yeah.
And that was one of them.
Yeah.
Okay.
Yeah, that was one of them.
I like it.
Yeah. So.
But my bad, I cut you off. So, like, how do you translate them into dollars? Like, what would you say, like, is the best way to do it?
Yeah, I mean, I try to focus on those 3 pillars, I call them, but it really kind of just translates into having a service or product that you can, shine education around to, create that want or need from the consumer. For me, like, luckily what I do is the American dream. So I do a lot of just like information surrounding buying a house and, what people think is the requirement and what it really is. Like reality is people think you need perfect credit. You only need a 580 plus credit score for FHA financing. You can have collections. You don't need a perfect score. And same goes for like your employment. People think you need to be with the same job for 2 years to buy a house. You don't. You need to be in the workforce for 2 years with a W-2 or salary hourly position in order to buy a house. And if you just change jobs, and you're increasing your pay or benefits or whatever the case may be, you could just have an offer letter and we can use that as qualifying income. And people don't realize that. And, down payment assistance and just different things. But I try to shine the light on, what makes the process easy and just what people think is the case and it's not. And that just translates into the sale because people trust me and they want more information from me. And it's just kind of snowballed. I didn't expect it to, do that. Right. But I've kind of just followed Gary Vee's footsteps and what he does as far as putting out content and information about branding and entrepreneurship and just providing value,
Value.
So that's
a key word, value.
Yeah.